Swati Hotkar with us on the show. We also have Amar Singh on the technicals. Swati, let's talk about the metals index, because that's really where you're seeing a lot of traction building up. What do you make of it?
Yeah, into the metal packs last week we have seen a very good momentum into these particular counters, but from the last two trading sessions we are witnessing that no major buying is coming up into these counters such as the general steel and power. From the last week we have seen a very good momentum from 72 odd levels to almost now 84, 85 odd levels, which gives a positive sign at that point of time. But definitely the selling pressure is likely to be getting up on every resistance level. So the stock specific as such, if you ask me on the metal pack, JSW, general steel and power will be avoided at the current level. But definitely Tata still looks very good on the technical chart pattern as such. On a daily chart we have seen a very good swing in the last week as such. We have seen a very good momentum from 380 to 470 odd levels. Currently it's just coming near its overbought zone. We might see some profit booking at the current level, but those who are definitely having a long position, they can hold on, and those who are likely to take a fresh buy call, definitely they can take on every dips towards 440, 430 on a downsides for a target of a 480 to 500 on upper level as such.
Okay, Amar Singh as well from Angel Broking is with us. Amar, hi, good afternoon. What's your index strategy and individual stock ideas?
Yeah, very good afternoon. As far as the index is concerned, we've seen the early part of the day we witnessed a sharp rally, but Nifty is unable to hold above the 8400 mark. So somewhat we've seen some selling pressure coming in. So there is this sideways market for Nifty, as I say. On the upside, 84.30, 84.40, that's a level of immediate resistance, whereas the downside 83.20, 83.30. So we'll have to see whether the market sustains above 8400. Closing above 8400 is important. However, the major support for Nifty would be around 82.30 to 82.50. Talking about specific stocks, the first one to look at is CESC. CESC is trading at its highest level since March 2015, so it's in a strong uptrend. And even today, it's a buy. So one can look at buying around 687 to 690 levels. That's a level to look out for CESC, with a stop loss of 677 and a target of 717. So that's one on the buy side. The other is one can look at ITC, because ITC again is witnessing technically it's very strong on the charts. The rally is there above 265. It could head towards 275 levels, so it can be bought around 255, 252 to 255 range, with a stop loss of 249 and a target of 264. And the third stock is GAIL. GAIL, we've seen that it's technically.
Go ahead.
Yeah, as far as GAIL is concerned, technically GAIL is very strong across all time frames. So it is definitely a buy at around 463 to 466, with a stop loss of 455 and a target of 483. It's trading at a multi-year high, you can say almost 2-year high. So it's definitely, any pullback should be used as a buying opportunity in GAIL.
Okay, let's talk about the individual buzzers in trade as well, and try and figure out some of those interesting ideas. And Mubina is here with that entire list. Mubina, it's got to be United Spirits which is topping your charts, I guess.
Oh yes, in fact this is on reaction to the very good set of numbers that United Spirits delivered over the weekend. The total income has grown 6%, net sales a bit tepid at 3%, but yes, when you look at the margins, it's a big beat from what the ET Now poll was expecting. It's come in at 11.8% versus 11%, so it's actually been able to expand its EBITDA margins, and mostly led by the kind of gains we have seen in the gross margins, which have come in at 42.9%. Net profits as well have surged from 37 crore rupees to 147 crore rupees, but do remember there was an exceptional loss in the corresponding quarter of 42 crore rupees. But yes, overall it's a healthy set of numbers. Prestige and above segment once again leading the growth of 12% despite demonetization. Of course, the regular segment has seen some pain, but nevertheless overall a good set of numbers, and that's the reason why you're seeing United Spirits rally in trade.
Oh yes, indeed. It's a very smart mover in trade. Swati, let's get in a chart check at 2155. Are you bullish?
Yeah, I'm bullish at the current level as well because we have seen a very good momentum. The volume is really increasing along with the price trend as such, which indicates a very positive sign at the current level. So those who are having any long position, definitely they should hold on with the trailing stop loss of 2100 rupees for an immediate target of again back to 2240, 2300 on the upper side. But fresh position will not be recommended at the current level since last week only we have seen a very good momentum in this particular stock from 19 to at 1940, 1950 all levels. So fresh position will not be recommended, but definitely those who are having a long position, they can hold on with the stop loss of 2100 for a target of 23 on upside.
Right, Mubina, what else is looking good?
Well, you know, in the thick of earnings season, so it's another result reaction coming in. Amara Raja batteries, the gross sales have grown 9.7%. So no complaints on the top line, but really the EBITDA and the margins have disappointed significantly, with the EBITDA degrowing by 11.3%, coming in at 204 crore rupees, which has led to a 300 basis points contraction on the EBITDA margin front. So from 16.8% in the corresponding quarter, we have dipped to 13.6%, and that is something that has led to weakness on the bottom line as well, with the net profits coming in at 112 crore rupees, down by 18% on a year-on-year basis.
Okay, that's the view coming in. And Amara Raja currently struggling in the session at about 871. Amar, what's the advice on the stock?
Yeah, overall, Amar Raja battery continues to witness selling pressure at higher levels. So it's not been able to take out the 930, 940 resistance level where it was trading a few days back. So somewhere or the other there is selling pressure. Technically also, if you look at the charts, I'm talking about a monthly perspective, it's not very strong. So somewhere or the other the upside definitely is capped. On the downside, you could say that 830 to 840 is a crucial level of support or resistance zone, support zone for Amar Raja battery. So that's a level where the market could take support, but we'll have to be cautious, because if that level is taken out, then it's headed lower towards 800 levels. So it's I would say higher. Any pullback will be used as a shorting opportunity in Amar Raja till the time it doesn't consistently trade above 830, 840, whereas on the downside it should hold or take support around 830 to 840 on the downside.
Okay, Mubina, RBL Bank, again an earnings reaction there, and this time around a smart one.
Oh yeah, RBI Bank has been able to deliver a very good set of numbers. The net interest income has grown by a whopping 45%. So from 222 crore rupees, it's jumped to 322 crore rupees. The gross NPAs as well have more or less stabilized, but yes, net profits on the back of that healthy NII growth has jumped a whopping 59.3%. So from 81 crore rupees, we've gone to 129 crore rupees. So healthy on the financials, even the asset quality has remained more or less stable. If you look at the NPAs, it's moderated. In fact, gross NPAs from 1.1% in the previous quarter to 1.06%, and so has been the case with the net NPAs as well, coming in at close to 0.52%. So yes, it's been a strong performance in a tough environment with stable asset quality, and even the NIMs have improved by about 14 basis points on a year-on-year basis and have been stable sequentially.
Okay, that's RBL Bank for you. Thanks, Mubina, for flagging off all those top movers and shakers. In fact, Swati, let's also get in your picks going. What's on the radar today?
Yeah, since this week is the expiry week, access Nifty is on the break or make level access. Today I am giving a one buy call on a sell and one sell call to be on a safer side as such. My first buy call is on a HPL Power. On a weekly chart as such, it has given a breakout of the pennant pattern along with the volumes. So the breakout comes to at nearly 40 to 43 odd levels. The volumes are really increasing at the current level along with the prices, which it's a very positive sign. So one should take a buy call at the current level for a target of 48 rupees. Downside one can maintain a 39 as a stop loss. My second call is a sell call on Apollo Hospital. This particular counter is trading in the lower tops, lower bottom. Also the fact that it is trading trading below it's all the important moving averages. So one should take a sell call at the current level, maintain the strict stop loss of 1165 for a target of 1100 rupees on a downside.
Okay, let's take in some viewer queries then. Narsimha Reddy has written us an email from Bangalore, bought about HDIL shares at the price level of 62.9, wants to know what he should be doing with his investment now. Swati, what's your call on the entire real estate sector and whether or not names like HDIL make for a good investment bet?
And this particular counter is just trading at near the low levels, or say on the RSI we can say it just trading near its oversold zone. So the selling will be very limited at from the current point, as such his buying position is at around 62 odd levels. I will suggest to hold on this particular counter because we might see some bounce back rally once it manages to give a breakout of 63-64 level is the immediate resistance level. If it manages to cross that, then definitely 74-75 is on the card on this particular counter. So at the current level the risk is very limited. He can maintain the stop loss on a downside 60 rupees and carry the long positions for a target of a 74-75 rupees.
Okay, that's the view coming in on HDIL. Swati believes that you could hold on. Ashok Leyland, we have a query coming in from Deepak in Kerala, an email query sent in. He's bought shares of Ashok Leyland at 79 rupees. It's a 6-month time horizon and now he's confused. Should he hold on or sell? Amar, let's get in your views on the charts. What would you advise?
Yeah, overall, looking at Ashoka Leyland, we've seen a sharp pullback or a rally, you can say, in Ashoka Leyland from almost 75 levels to currently trading around 85 levels. So, since he's bought at a level which is which I would say from the current prices is significantly lower, so he should definitely hold on to the stock with a stop loss of if he's holding from a long-term perspective, as he's saying, almost 6 months or so. So he can have a stop loss of 72 with a target of 98 to 100 on the upside.
Okay, that's the word coming in on another query of Ashok Leyland from our viewer. But thanks both of you for taking the time out and joining in with your answers. Swati as well as Amar, good to have you in the show as always. Still pretty quiet for the markets. Let's take a very quick break and hope for some recovery coming in after these few minutes.